All right, I'm here for another episode of Buy or Sell What the Hell, episode 34. It's just going to be me today, Alec, your host, and I'm here with two legal experts, Phil and Heather from Finaro Law, and we're just going to talk best practices for cryptocurrency trading, investing, and kind of how they view the shifting regulation and fundraising, specifically with ICOs. So if you it's been a while, Phil, but welcome back to the podcast.
Oh, thanks, Alec. I miss it, actually. I like talking crypto every day, and if I can present to more people and people can learn, I'm very, very happy to continue to do this.
That's good to hear. How are you doing, Heather?
I'm well, thank you. How are you today?
Oh, doing just fine. It's always a good day when you get to talk about crypto. So if you guys kind of want to give your background a little bit, how long you guys been in the space?
So I think we just passed our 2-year anniversary in June. Seems like it's 45 years with all the activity, all the presentations, all the clients that we've gone through during that time period. But we started off with an ATM client back in June, became really embedded into the world, learned about it for about 6 to 8 months, and then started taking on clients. And that's we're here now. We've been through the Wild West and now the more regulated section of the SEC and the world that is now the crypto space.
And I focus mainly on the regulation side of things. Where are they going? What's the latest news from the SEC? What enforcement actions are they taking? I'm constantly looking into that, seeing where the winds are blowing so that we can, advise our clients where we think it's going to go and how best to proceed in the space.
Man, I could assume you've been pretty busy lately with all the buzzing.
A lot of action lately.
There's a lot of action pretty much across the board for legal. I mean, the development, trading, and, specifically trading, because this is a trading podcast. I was kind of curious for traders and investors, everyone's looking long-term with this stuff. And, a lot of these people are here for the money, but a lot of people see this as a future for finance and, a whole new asset class. And something that I don't hear a lot talked about is, from a technology standpoint, securing your tokens and coins and Bitcoin is one thing, right? But from a legal standpoint, for trusts and how do you really take care of yourself and whoever else, you're with long-term? It's a whole new ballpark here with everything being digital. And how does that are there best practices yet, or is this whole thing kind of still evolving?
Yeah, so there, no matter where we are in the evolution, there's always best practices. It's just the best practices change.
Yeah.
So presently, obviously, you've talked before on the trading side. It's always beneficial and to keep most of your assets in cold storage and not on the exchange. One of our strategic partners, just saw something happen with his account on an exchange, and it affects everybody. And we get calls all the time about getting hacked on the exchange, and then problems between the banks that where the money's coming from into the exchange. So obviously, cold storage is the way to go, and I'm sure your trading group and your audience here has heard that a million times, but it dives deeper into the legal perspective in two aspects, particularly knowledge of family members, both in a amicable situation where you have a happy family and everybody knows about the crypto, or one partner knows about where the crypto is held and one does not. And then obviously in the non-amicable, the divorce arena. So you have two sides, the preparing and making sure everyone knows in case someone passes away, and then obviously determining and valuing assets in the world of divorce. So I can go through both or one or whatever you like.
Yeah, I'm just kind of curious about, what are some of the basics that, are there basic steps someone could take, or is it, for long-term investors specifically, let's just start with an example, you and your spouse. Is it just through education? You just got to educate them on the keys. Is there some sort of framework that's required, similar to any traditional asset?
Yeah, so I guess it's like any other asset is that if you have your passwords on social media, now is a big deal. Or if you have your bank account numbers and online banking passwords, you really have to familiarize yourself with what type of wallet do you have? Do you have an offline wallet on a computer? Is that, are those keys protected? What if that computer, is destroyed? Have you gone through a Trezor wallet or, some other wallet solution? And just explaining to them, and the kids as well, is how are these keys saved? What do they mean? Taking them through the process of, here are our private keys on a Nano S wallet, but more or less, it's not only the private keys, it's where it's located. Is it saved in a safety deposit box? Is it in a safe? Is it, under your mattress, which obviously is not advisable, but is the safe, is it protected from fire? But it's almost also is like anything else, is if you haven't been doing something for a while, or if you're just a buy and hold investor, you just place it, away. You have to give yourself a refresher course every month or so. So that's an important feature. Also, if you have an estate plan, that has to be built into the estate plan. And a lot of attorneys don't understand what crypto is, let alone how do I protect my keys and how do I transfer it? And have we actively consulted the accountant related to the crypto? Obviously before December of 2017, values went so sky high, where some of the estate tax situations triggered. So bringing the family, bringing the accountant, the professionals, the attorneys, other trading platforms trading partners is a very, very critical piece to this.
Yeah, it seems like a lot of these, you have to do more it's kind of on the responsibility to educate, whoever your legal advisory is or tax. It seems like the consumer now has to educate them on this. Seems like a lot of them are taking time to really educate themselves on these. It's hard to find someone that actually knows, what these are, what these crypto assets are and how to handle it. Or some of them are just, they seem to just flat out refuse to, in a lot of cases, they don't understand it and they don't want to get involved in it. So what would you recommend to do? Because not everyone can find, someone that's knowledgeable, someone like, you guys at your firm.
Yeah, the first thing is to talk. This is no different between a real estate client or a corporate client coming in to ask us advice. The key is to surround yourself with professionals that can help you. A perfect example is that, okay, I've got Bitcoin and I go and I figure out how to convert it to Bitcoin Cash when it forked in March of 2017. So what, or no, if you owned crypto in at that time and it forked, then you buy and sell that, or if you're without an accountant, or an attorney to say, hey, who does this or who's in this industry, then you're going to find yourself with a problem with the IRS. So people tend to sort of shy away from the professionals because they think it's going to cost too much money, but it's probably the most critical first step. And that's what we've been trying to do, is help educate people through these types of podcasts and answering questions for clients as they go through that process.
Yeah. Okay. Well, that pretty much answered my question. I know you take a look more specifically at all these fundraising and ICOs, Heather, right?
I do, yeah. That's really where I spend a lot of my time, regulations and then ICOs, and they really go hand in hand as these various startups are trying to figure out how to fundraise, how to bring in the money, how to get their platforms up and running. And it's been interesting watching the development of the regulations. The SEC, in a fairly predictable fashion, has really just taken all the existing regulations and tried to cram, for lack of a better term, cryptocurrencies into the existing regulations. So they say, okay, cryptocurrencies are a security, therefore you have to follow the basic securities laws. Mm-hmm. And that seems to be, many ICOs this year in particular are now going that way. There are a lot that are now applying for what are called A+ regulations, which would make them registered securities and completely tradable. It would allow them to be on most of the exchanges, even the exchanges that are more heavily regulated by the U.S. It would allow U.S. investors and foreign investors to invest without any issues. You wouldn't have to be an accredited investor, meaning you wouldn't have to have a net worth of over $1 million and have annual income of over $250,000. So it would really open things up. Mm-hmm. And most of the or many of the new ICOs that I'm seeing come out are moving towards A+ regulation. It takes time and it is not inexpensive. However, the SEC was fairly clear in their indication that they are going to consider pretty much all of these ICOs securities, and therefore they are moving against people who have ICOs or who are listing ICOs that aren't properly registered or register under the exemptions.
Mm-hmm. Yeah, I mean, when you think about, how do you feel? Do you think that's the best option there is just trying to cram it into something already existing? Because I don't know, the idea of raising capital without having to ask anyone for approval, that was like the game-changing dynamic of ICOs.
Yeah, it absolutely was. And it's interesting because that was 2017 in the Wild West, and everybody just raising money like crazy, and they were raising money hand over fist. And a lot of companies got off the ground because of that. The only problem with that is that you're then ripe for fraud. And, the companies that the SEC acted against were all just blatantly fraud.
Low-hanging fruit there.
You look at any of the ones that the SEC has a cease and desist against, and it's, Ruth Bader Ginsburg endorsed this ICO. Well, a sitting Supreme Court justice did not, in fact, endorse this ICO. There was the one that Steven Seagal was promoting.
Oh, yeah. Jeez.
So that was a good one. There were several that claimed they were FDIC insured. The government doesn't insure. The banking industry doesn't insure crypto assets. Mm-hmm. It's not insurable at the moment. So those are the ones that the SEC went after. The other ones, the ones that were basically trying to do everything properly, the SEC hasn't moved against. Will they? I don't know. That's what a lot of people said. I'm just going to go for it and see what happens. And so far, at least if you didn't commit blatant fraud, you're kind of moving along. But the SEC certainly has made it very clear they have their eyes on everybody, and they're keeping an eye on things, and they're certainly moving against anybody who has complaints against them, anybody who has done something fraudulent, they're certainly moving against. And I think just from a best practices standpoint, the ICOs that are coming up now that really want to be a long-term company, we want to be the next. Well, Facebook is not a good example after yesterday's disaster, but we want to be the next Google. We want to be the next. Those companies are saying it's worth it from the beginning to invest the time and the money in getting A+ certified, so that down the road we don't have any issues. Mm-hmm. We could do it without the regulation, and we could simply build up a big stockpile of money. So if the SEC does come knocking, we've got a war chest to fight them. Mm-hmm. Or you can, put in the due diligence at the beginning, put in the legal at the beginning, and be fully compliant and not have to worry about the SEC knocking on your door a year from now.
We haven't really seen any sort of fights yet, have we? Have we really seen anyone?
They're just starting. They're just starting. There's a couple that are in the works right now. But they're just going. The first one that I saw that's really moving forward was just going to oral arguments this month. Mm-hmm. So they're really early in the process because it's a long, litigation takes a while. So it'll be curious. I'm watching the first one, which was the cease and desist was originally filed against the company, I believe, in December of 2017, mm-hmm. and that is the case that is just first coming into arguments now. They both sides issued briefs back in May. and then arguments are moving forward. But the judge has not, the judge hasn't given any indication really which way things are going, but it looks like we'll see. It'll be curious to see. I suspect it's going to go in the way. I suspect it's going to go the SEC's way, because again, the ones the SEC, the ICOs that the SEC moved against first were those that really had some legitimate fraud. The interesting argument that I want to see how the judge rules is, in all these cases, even the ones that had fraud, the two main complaints that the SEC filed are you are issuing an unregistered security and you are not a licensed broker dealer, so you can't issue a security period. You can't trade a security period. Those two are universal. Every single complaint that has been filed by the SEC has had those two issues raised, in addition to others. But those are the two that'll be interesting to see how the court rules. And does the court decide, yes, these are securities and they are unregistered and you can't do that? And do the people who issue these securities, do they need to be licensed broker dealers or not? Mm-hmm. So those will be the two interesting, the fraud stuff, they're going to lose on that. The SEC is going to win, they're going to lose. It's fraud. But those two issues will be the interesting ones. I suspect it's hard to fight the SEC. So we'll see what happens. But I don't see the SEC in terms of, cramming ICOs into existing regulations. I don't see the government making new regulations. That's work for them. And let's be honest, they like to do it the lazy way. They've already got regulations that kind of sort of fit. They're just going to use those. I don't foresee new regulations coming out. They may tweak them a little bit, but basically they're going to use the existing securities laws that are already out there. Mm-hmm.
So, okay. So you don't think there's going to be, some sort of new blend, maybe a little bit more liberal view towards innovation, or is it just going to be, do you think that's going to fail eventually, just trying to cram these into those, stifling some sort of innovation? Or, is it a fair assessment by the SEC after reading so many of them?
Yeah, it's difficult because you realize that there needs to be some regulation. When you see what people are doing out there, you look at it and you say, okay, really, this can't be allowed. There has to be some sort of consumer protection because there are no consumer protections in place right now. Are they going to overregulate? Probably. That's historically what they do. If they overregulate, is that going to stifle the funding? Yeah, it absolutely will. Will they probably tweak it in some way? Sure. Just like they did when they brought out the crowdfunding, the idea of getting more people into investing.
So here, Alec, this is what I love about crypto. We'll have room to disagree even within our own firm here. So I think the SEC, everything Heather said was correct, but I think this is the decision the SEC has to make, and I think they will make it based on the fact that not only are they supposed to protect people, but they're also investors. They're also supposed to stimulate the industry and entrepreneurs and these innovative technologies. If they stifle it, they've done the United States, a disservice. So that's the goal. And the reason why I think that they will become a little bit more flexible, and I agree, Heather's absolutely right, they will use the baseline regulation to start, is because the institutional investors are coming in heavy in the last now 8 months. And if institutional is involved, that means regulation's involved. And if institutional is involved, the SEC is going to want to make it so that the parameters that they create allow for the growth of the industry.
That's an interesting viewpoint. I don't hear many people argue that side of it. It's usually what Heather said is that I feel like a lot of the space, just the philosophy behind everything, is so anti-regulation of any kind, which mm-hmm. I think the outright fraud, the blatant fraud needs to be dealt with, obviously. It's just a fine line there is how far do they take it. And I think a lot of people are always assuming the worst case here.
Absolutely. And when we were talking about this 8 months ago, 10 months ago, I was of the mindset of regulation is coming. It's going to be pretty harsh. I'm hoping it's not going to be so harsh as to completely shut this whole thing down. But I acknowledged at the time that I might be being a little idealistic and thinking that the SEC wasn't going to clamp down overly tightly on this whole thing.
So let's kind of bring this back down to what this means for the average kind of the trader, investor, or enthusiast, because a lot of people talk about regulation, but what does that really mean to them about the SEC dealing with these ICOs? Does that mean you could still trade the tokens? My tokens, I already bought this ICO out of, wherever it is.
Right.
What am I in trouble now? Can I continue to trade it? I mean, what should the average person be seeing these headlines by the SEC and fundraising and crowd sales, and what sort of perspective should they have looking at these news items? And
well, the SEC certainly isn't going after any individual investors. That's not their goal. And like with any investment, your average investor, when evaluating an ICO, needs to look at it carefully. If it says Ruth Bader Ginsburg is endorsing it, you might want to take a second look at that and say, hey, that's a red flag. I don't think that's really very likely. So you do, just like you would with any other startup company, you need to look at the team. Who is the team? Research the team. Make sure they are who they say they are. Make sure those pictures on the website haven't been stolen from some other website. You really need to do your due diligence, especially on ICOs. If they're promising crazy returns, if it's too good to be true, it's too good to be true. If offers look really good, or they're promising crazy returns, or they're not giving you the warning that this is a highly speculative investment and you could lose your money, those should be red flags to any investor.
So Alec, that's interesting, and an interesting question, because that's sort of what we're trying to do. We've sort of compiled a large number of strategic partners in the space to allow for investors or people that are developing products, so they to come to one place. And that's what we're doing on our strategic partnership page on our website, the Fernaro Law website, is we now have accountants, we have developers like Noah from Block Edge. We have a bunch, obviously, consultants in the space. We have investors, venture capitalists. So we're trying to make it easier, because when I first started, I interviewed probably 25 accountants to come down to the one that we thought was the best of the bunch. His name's Xian, and I actually went and visited him down in Texas, along with a bunch of other clients a couple of weeks ago. And it's important that a client doesn't have to, or a customer or an investor doesn't have to call 20 people to get the answer to the same question, when they can make one call and have that connection. So that I think that's very valuable to people that are looking and participating in this space, especially people that really care about the space.
Yeah, we might have to get that accountant on here, because I feel like every trader has a question about what do I do with my taxes. There are a lot of people that don't even want to trade often because of this, the implications of what they're trading. Can they be trading it? What do you even, if you can trade it, how do you even deal with it? And it just seems to be broken down into so many different subsections. But I think that'll be great, and it's good to hear that there's someone in the space actively trying to educate other like-minded, same people in your field. You're, like I said, there's such an educational gap. You can't just go to your local accountant for the most part, or local law firm, to get any sort of advice. I mean, they're looking for advice themselves.
Right.
That's what it feels like.
Right. The other thing to think about when thinking about which tokens are quote unquote safe to trade and which ones aren't, are making sure you're dealing with a quality exchange, and making sure the exchange that you're dealing with, because in theory, now there are no regulations around exchanges yet either. They're just starting to get there as well. But in theory, the exchanges have vetted the tokens that they have on their exchange. That is not always true. I have on more than one occasion seen tokens being traded for a day or two on an exchange that the SEC shut down several days prior, and they finally get dropped off the exchange a few days after the fact. But if you are working through a quality exchange, the tokens that they have available and the coins they have available on their exchange are going to be safer to deal with.
So,
Gibraltar just opened their exchange to the public on Monday, and they go through a highly regulatory process in Gibraltar. So that's going to be interesting to watch how that exchange moves now that it's open to the public.
So I know it's probably kind of a biased question asking you guys from a legal perspective, but how do you guys feel about like an exchange, something like Binance moving to Malta, to avoid that sort of regulation? I mean, the average trader, personally, you gotta then, you become hesitant. Should someone become hesitant to get involved into an exchange with any real size on, in comparison to all these different, jurisdictions?
Well, so it's interesting. We've talked to several of our clients who have talked about exchanges and where do you form, where do you open, where do you do business. Malta and Gibraltar have been two that a lot of exchanges have been talking about. Gibraltar because they have regulations in place, and we know what the rules are going to be. They gave you a sandbox. This is what you need to do. As long as you play nice, you can be open in Gibraltar and be completely legal. Malta has regulations in theory coming, but there are no regulations in place at the moment. And so, some exchanges want to be in there is no regulation land. We can do whatever we want and worry about the regulations coming down the pike at a later date. Others feel like I'm better off knowing what I'm getting into rather than, Binance moved from Singapore because they changed the regulations in Singapore. So they moved to Malta. Will they move again when Malta enacts their regulations? I guess they have to do a cost benefit analysis to themselves. Is it more of a pain and more money for us to continue moving to jurisdictions that have no regulations, or do we pick a jurisdiction that has regulations, meet the regulations, and stay put?
Binance, Heather, I don't think is worried about money at this point.
I don't think they are either. However,
yeah, they're funny because they also just invested heavy in Bermuda. I think
that's their next jump.
Yeah, so that's why everyone comes in and we prepare for ICOs and exchanges, Alec. They go, oh, well, let's go here, let's go there, and what's going to happen? And we go, well, look at Binance. I mean, you could make a decision; it could be the wrong one. It's not like the world is controlled by one single authority. It's the world is controlled by a lot of people. So, United States is a big, powerful part of it, and China is too. But that's what we're all navigating. That's why this industry is so exciting.
Yeah, well, okay, that's interesting. I mean, you guys we'll kind of wrap it up here. We like to keep these kind of within under half an hour. Just kind of found that everyone likes just grabbing this on the commute or whatever you're doing, but keep it nice and short. How would someone get in contact with you guys if they're interested in, what kind of service do you guys really do? Just, more than legal, obviously.
Yeah, so we consult a lot as well. If they want to reach out to us, the best thing is just to go to our website. It's fornarolaw.com, FORN like Nancy, ARO, law.com. We do have a cryptocurrency page. We do have practice areas in almost every area of the law. It was funny. We were, and we have connections all over the nation and internationally now too, to connect our clients to. And we like to help people. We like to connect. If you go to our blog page, we just very proud of the recent blog we posted on connecting people. I think that's probably one of our best features now, is being able to put people with the right people so everyone benefits from it. So, I mean, it's a really a good location to start even talking. So if you have any questions about anything, we'll usually be able to connect you to somebody.
No, it's great. Hopefully I grab you guys on here more often. Maybe we have a lot of trading and investing news, and 90% of it seems to be regulation based nowadays. So as this is all evolving, maybe we'll hop on for some segments on some of these news items. But it's good to hear. FornaroLaw.com, and you guys You guys have anything else to say at the end here?
No, it was good talking to you. Curious to see what's going to happen in the next, month or so. A lot going on in the space.
I think everyone is.
Yeah.
Yeah. No, yeah, we're glad to talk to your traders in the future, and we can get more specific into that as well. But yeah, we'll definitely have some reports on how the litigation's going as well, because I think that's the next bastion of what's going to happen in the next 2 months is litigating within the world of crypto.
All right, until next time, guys.
Thanks.
Thanks.
Bye.